with war, it usually brings uncertainty. And people go towards mortgage bonds. That's where they put their money when the things are uncertain usually. So usually with war, you usually have lower interest rates. But over the last 45 days, we hit the upper fives, but then we started bombing gas prices, you name it, and now we're back in the mid sixes, unfortunately. And so I feel like some people have been worried. They've been wanting to see what's going on. So I feel like it's been, for spring, I feel like it's been slightly less activity. There's still a lot of activity.
Yeah.
So,
Do you think people are waiting till May when that switch is going to happen?
Possibly. I don't really know, but I know that when people are uncertain, they tend to pause and freeze.
Definitely.
And they just want to watch. Sometimes watching good, sometimes it's not. So,
Well, I think, like you said, most people are worried about paying for gas right now.
yeah. I mean, gas is up, like 50 cents or $1?
Dude, it's like $3.80 right now.
So it's what, $1 higher?
Yeah.
$1, yeah. So, I mean, that adds up. You get a 20-gallon tank, it's $20. You're filling it up once a week. I mean, that's $80, $100 a month. That eats into a fixed income.
Absolutely.
So.
Is that disqualifying people, do you think?
Well, we don't look at, we do look at credit cards, but I mean, we don't, I don't know.
Well, if you're somebody like me, I put most of my gas and stuff on credit cards for points.
So, yeah. So, I mean.
Then your utilization's higher.
And your utilization's higher. If your utilization's higher, then your credit score usually drops a little bit because it's all about keeping it under 30% or less on utilization. And we always go off of scheduled monthly payment. So if you've got a $3,000 limit Discover card and you're at $2,700, your monthly payment's going to be, $300 a month. If that balance on there was $500, it might be $50 a month.
Yeah.
So for mortgages, we're always going off of whatever the scheduled monthly payment is, never what the balance is. So people will call me like, I've got a $100,000 car balance, and I'm like, that's great, but we actually don't care about that. What's the monthly payment?
So for mine, and maybe it's different because it was like a student card. It's my first ever credit card.
Yeah.
I don't have a monthly payment. I have a minimum payment. So every month, like I could have $2,000 on it, but it's like your minimum is $35. But the statement balance is whatever I charged from the 15th to the 15th. That's the statement. So the statement could be $1,200, but the minimum payment's only $35. I guess it won't. They'll charge interest on what I don't pay.
Yeah.
But they won't penalize me for late payment if I pay at least $35.
That's probably like some credit builder kind of student account. Yeah. So, I mean, in Alabama, you need to be 19 years old to buy a house, and you need to have some credit scores.
Yeah.
So preferably like a 640. So the trick that I always tell people that are wanting to buy a house is, are you 19? Do you have 2 credit cards? You're buying food, you're buying gas. Go open up one of those cards, maybe.
Yeah.
One of those credit builder cards. And then the real cherry on top is if you have a parent or a guardian or somebody that could add you as an authorized user. And you do the piggyback method, and you're able to piggyback off of that person's good credit history. So you usually need to wait 2 to 4 months of you having the 2 credit cards and maybe the piggyback method, and then you'll have some scores generate. But until then, even if you have a bunch of money or a good job, you typically need, for most any loan, you need a credit score.
Definitely.
So, and you got to be 19. I've had some stories where one time this agent called me to rescue a deal, and the lender was from out of town. It was a Louisiana lender. And they were telling me this, they were telling me that, and they're supposed to close in a week. And I'm looking through the file, I'm trying to save it, and I go, hold up. What are we even talking about here? This kid's 18. You cannot buy a house in Alabama, and this is another reason you need to use a local lender.
And why?
That lender in Louisiana doesn't know that you need to be 19 in Alabama. They've been working all this time, spending all this money on this whole process when this should have been stopped day one. But
so is that different in different states?
that's correct.
That's
so
different.
Louisiana, you can be 18. Florida, Mississippi, you can, Georgia, you can be 18. Alabama, you need to be 19.
Interesting.
So they went through the whole process with an outside lender, not this, and that's why you need to use a local lender. Because little things like that you think maybe don't matter, it killed the whole transaction.
Yeah.
Those sellers thought they were about to sell their house. That buyer thought they were about to buy that house. They spent inspection money, appraisal money.
It doesn't matter.
It doesn't matter. It doesn't matter. I want to forget that because it was something so simple that should have been done on day one with proper expectations and thoroughness.
Yeah.
And it was just missed. So,
And that's because legally you're not
Legally-
considered an adult to enter a contract in Alabama
Till 19.
until you're 19.
That's right. Yeah. So
So I want to ask something about the credit cards. I don't know if you've seen this on social media, but I've seen some gurus, some hacks. They say get more credit cards to better your utilization. That could help your credit score. What do you think about that?
I think if you can manage them, then I think it's okay. I personally have 5 credit cards. I probably only use 2 or 3 on a regular basis.
I think the best advice I've seen was take it and cut it up. You know,
Sure, you open up a
Use your-
trade line
yeah.
because you never want to close out a credit card.
Yeah.
Okay, even if you don't utilize it anymore, you need to keep it open because one of the ways they calculate credit is off of the length of the credit being open. So even if you're like, I don't want to use this Discover card anymore, keep it open, cut it up, like you said,
Yeah.
throw it in the safe. You don't have to put any money on it, but if you close out something that's been open for 7 years, even if you weren't using it, it will hurt the scores.
Really?
Paying off a car, you would think that's good. You're paying off a depreciating asset, a vehicle, can hurt your score because you're closing out that trade line. So having multiple cards, sure, have multiple cards, just don't close them out.
Yeah.
And I think it's important to use them periodically and definitely try to keep your utilization lower.
well, and some of them offer good benefits, some points back and
yeah.
some travel points or whatever.
I personally know I can manage my my monthly budget. I think that's important. And if you can treat it responsibly and treat it as your own money you're spending, even though you're borrowing someone's money, paying it back, borrow money, paying it back, then yeah, the points, the miles, if you're a travel person, go get the miles. If you're a point person, want the cash back. So if
Yeah.
you're eating out at restaurants, but the big thing is, are you going to be paying it off in full every month? Because if you pay it off in full every month, then there's no interest. If you do leave a balance on there, there is going to be a little bit of interest, which is okay.
Consumer
but-
credit's the worst, though.
But yeah, it's got some of the highest
Highest
interest rates.
Yep.
They can be in the 20s or 30s. So definitely want to. How I live my life is I pay it off in full every month.
Oh, yeah.
And you get all the free
No
points
doubt.
or miles.
Yeah.
So I'm like, this is a hack for the system that I'm going to use the system against the system, and I'm going to get $500 that year. I just spent my money. I got cash back.
Yeah.
So
It's pretty cool.
So yeah. But
So how important is a credit score? You mentioned at least 640. Where did you get that number? When you're applying for a loan, how important is that score and maybe your interest rate, and how does that relate to your borrowing power?
yeah. So the credit score actually has very limited factor on what you can borrow. The main thing on what you can borrow is how much money are you making per month and how much debts do you have, your monthly obligations. What are your scheduled monthly obligations versus your earnings? That's going to have a bigger impact than a credit score of 650 versus 700. So a lot of times with the lower credit scores, I see that they're thinner. So when I say thinner, it's like the gentleman that's maybe 19, he just graduated, he's working at Airbus, let's say, just got 2 credit cards and authorized user. He's got a 680 credit score, but he's only had credit for 6 months.
Yeah.
So that's thinner credit. He's got a great score, solid score, but it's thinner. So usually with those thinner, you have to come up with the down payment. And sometimes you need reserves too to get over that hump because the system acknowledges that you have been a good steward so far, but you haven't had a real big chance to maybe mess something up.
Yeah.
So
So should people be doing that? You say like opening a credit builder line or something, or piggybacking off your parents. Should they be doing that maybe before they go to college or when they're freshmen in college?
So I would try to get the authorized user done as soon as possible. I mean, if you're in high school and your parents are cool, you could add somebody as an authorized user when you're in high school. And then the credit cards, I would say when you're 18 years old, whenever you're eligible, I would start applying because you need to start thickening that credit and get a credit score to generate because unless you're paying cash, you're going to need to borrow some money.
Yeah.
And the whole reason people covet their credit scores is for large purchases to get themselves the best deals on cars and homes. And we can do soft checks, but I never do with a pre-approval. I do hard checks.
Yeah.
So your score could possibly go down 5 to 10 points, but when I do a hard check, it's good for 4 months, and it's a real pre-approval. We've actually seen all the credit, and we know that you're pre-approved. If we're doing soft checks, we might only look at one credit bureau. When we find a house and then we do the hard check, then you can't actually do it anymore. So, and it maybe is a 5 to 10 point reduction, but in the grand scheme of things, those 5 or 10 points isn't going to matter.
Yeah.
So,
Well, I've been told inquiries make up like 5% of your credit score.
yeah.
So people think, oh, well, I can't go check this lender. I can't go get approved for this. That's going to pull my credit down. It's not. Not as much as you think.
So the credit bureaus did do one thing right, and they allow you for 30 days to shop around for home loans. So they wanted you to be able to compare apples to apples. So if you apply with Brandon Reed and then you want to apply with Rocket Mortgage and your local credit union, all three of us inside of 30 days should reflect the same credit score.
Okay, cool.
Okay, so you can shop around and compare. Otherwise, first person you applied with versus the last would probably be the better terms up here, and then the worst terms with the person you applied with last. So they tried to do one thing right with there.
Yeah. Well, I mean, it shows strength because now you're not just taking the first thing that's in front of you. You're shopping.
Yeah, you're shopping.
Trying to be smart.
Because there's different loans out there. There's different people that you work with, different communication styles. Some people are callers. Some people are texters.
Yeah.
Some people just want to be an email. So some people want to sit face to face, and we can do the whole process face to face. So each bank or institution does things a little differently, but for the most part probably has the same vanilla products. But then there's probably tons of outside of the box with each different lender or bank.
Yeah.
So
because I mean, a mortgage, it's just like any other product. You know, go to the gas station over here, the Gatorade's $3, but the one across the street is $4, right?
Right, exactly. Yeah.
I mean, like, what's the biggest misconception around lending that maybe you've run into with your buyers? Something similar to that, like
something that I really thought was interesting. So I've only been doing this for 5 years, but with the 20% down, 800 credit score, bigger loans, you actually have worse interest rates.
Really?
Yeah.
And that's like the gold standard.
That's the gold standard.
Yeah.
So so it was baffling to me. So we are not rewarding the people that have been good stewards of their money and their credit and savings with the best interest rate. They're getting higher interest rates. Mm-hmm. Slightly higher. But it just was really baffling to me that a smaller loan amount, worse credit score, and less money down was getting, let's say, the 6%, when the other guy buying a $400,000 house, 20% down, 800 credit score was getting 6.25%. So
why do you think that is?
So one of the things is monthly mortgage insurance. So if you don't put 20% down, you're going to have mortgage insurance on the loan. So that is comforting to lenders, having that mortgage insurance in place there. So because that mortgage insurance is there, you're able to offer a slightly lower interest rate. So it was just interesting explaining to people that actually maybe you should only put down 10% because you're going to get a 6% and have a little bit of mortgage insurance that's going to fall off eventually, versus putting down all 20 and you don't have mortgage insurance, but your rate's now an 1/8 or 1/4% higher. So you pick your poison. So I mean, sure. At the end of the day, my job is to talk to them, go over their goals, their wants, and their needs, and then tailor a mortgage specific to them. And a lot of times, so where I work is a bank, but what I like about my bank is I have the ability to broker. So I'm like a hybrid banker. So I can work with my bank, but then I can also broker out to these 37 different investors. So I'm able to shop around for my client if my bank doesn't have it and get them the best deal. And I present those options to them so they can make educated and empowered decisions on, hey, Stiff, you guys can do 3% down, 10% down. I got you approved for some down payment assistance, a next door program. So here are all the numbers and the estimates. What questions do you have? You have 4 months to find your house and go spend this money. Let me know how I can help.
Yeah.
And another thing that I know that is valuable is communication. You know, everyone wants a clear path moving forward, knowing where we stand. My clients are texting me addresses all the time so they can get estimated monthly payments, because I never want anybody to get blindsided after they've spent time, energy, and gone under contract at worst.
Definitely.
To find out their monthly payment. You know, and then we're having people backing out because, hey, I thought it was going to be $2,000 and it's $2,400 a month. So I always want to set clear expectations up front, so everyone knows where we're going before we actually get too deep, and then we can't back out.
Yeah.
So
because there are things that people don't know about, and that's something I run into too. You mentioned your pre-approvals go for 4 months.
Yep.
And a lot of people, they want to know, well, when should I get pre-approved? I would argue as early as possible.
That's correct.
Because you have things like PMI and mortgage insurance that they don't factor in, they don't understand, or maybe home insurance. You know, the quotes that y'all bring in, or even property taxes.
Yep.
Those can all change, especially depending on how your property's claimed, whether it's homestead or not. You know, and people have no idea.
That's right.
But we like to tell those things beforehand, right?
Yeah. So some people will call me, and maybe I've closed their loan 2 years ago, and they're like, Brandon, my monthly payment went up. And I was like, your monthly payment didn't go up. The mortgage did not increase.
Yeah.
What changed is the property taxes or the home insurance increased. And those are the escrows that are associated. Those escrow accounts are built into that monthly payment. And maybe the home insurance went up $100 a year, so now your monthly payment's $8 greater every single month. So I had a client call me this morning, and he wanted to know, when is he going to pay for his home insurance? You're going to pay for a full year of home insurance at closing, and then every single month, you're going to pay 1/12 of whatever that annual premium is. So it's going to be a full year ahead, and then each month you're going to keep that savings in there, so that whenever it comes due again, they're not going to say, hey, Mr. Stifling, you owe us $3,000. It's already in your escrow account.
I think that is such a common question. I can't tell you how many times people ask me, why do I show an escrow a payment of, $1,200, but then I'm also paying insurance for the whole year following? Well, it's because you're paying in advance.
You pay in advance for the property taxes and the home insurance. Those are escrow accounts when you're buying a house. And you actually get better terms when you escrow. So it's all about risk. So they want your ability to pay them back. They want to feel good about it. So if they can mitigate that risk by making you or seeing that you're paying your property taxes and home insurance, you're going to get slightly better deals on the fees for closing and the interest rate.
Okay.
So some people are like, Brandon, I want to waive escrows. So when they say waive escrows, that means that they don't want to pay with their mortgage the home insurance and property tax. Totally fine. To do that, you need to put 20% down and ask for an escrow waiver. Okay. But sometimes when you do that, the interest rate can go up a little bit because now it's deemed as a little more risk because they can't insure that you're paying your property taxes and your home insurance.
Yeah.
So
it's best to just let it go to escrow.
Let it go to escrow.
Don't think about it.
So you just pay one payment every month and it's all taken care of. And you could probably get a little bit better deal with the bank or lender doing that because they can see that it's being taken care of.
Yeah. So people need to start thinking about it. What makes me look reliable to the bank?
Yeah. So we are always going to look at what's your credit score, what monthly debts do you have, then we're going to look at what's your income and how much money do you have saved in the bank. So one of our really popular programs right now for first-time home buyers is our Rent Buster program. So have a 600 credit score, no geographical restriction like a USDA, no income cap, and have $1,500. And you can get lent up to $500,000 and not have to come up with a down payment. So basically, in anywhere, any location, you can make $1 million a year.
Wow.
And it's up to 50 debt to income. So that means you have a ton of flexibility on purchasing power.
That's pretty high. So explain what kind of ratios debt to income are there typically?
Yeah.
So why is 50 advantage a good
50
advantage?
50 is a good ballpark.
Yeah.
So if you're making $10,000 a month, your 50 would be $5,000 a month. So the biggest loan I could give somebody that makes $10,000 of gross monthly income would be a $5,000 payment. Okay?
Gotcha.
But it's $5,000 of the proposed housing plus all current debts. So if you have a $500 car and then let's say $500 in student loans, then your most you could get is around a $4,000 payment for your debt to income. Now, USDA is a great loan, but you have to be in certain locations. You can't make too much.
Yeah.
Its debt to income is roughly 43, 44. So it restricts that purchasing power. So a lot of times I'm like, hey, you can get approved for $300,000 with our Rent Buster program. We get the seller to cover the closing. You only need $500 to buy this house.
Yeah, that's a big deal.
Or USDA, I'd say, well, if it's USDA, it's $200,000, so it would be less. VA, I love helping veterans. That has actually no max debt to income ratio.
Really?
So as long as I can get an approval on my system, they're approved. Awesome. So that's what's really cool. Love helping veterans. That's no money down, no mortgage insurance. And then conventional is that clean 50 debt to income. FHA is 57.
Yeah.
So affordability is super tough right now. So, I mean, houses cost more and interest rates are still slightly elevated. Now, when people say they want interest rates to be lower, they are. They were up to 8.25% in 2023, the fall of 2023. We are now in the low to mid sixes. Okay? Yeah. So that's a 2%, a 25% reduction off of the highs of just 3 years ago. Mm-hmm. So when people say they want rates lower, they are. But that still isn't 3 or 4%, you know, where they were. So how do you combat affordability? FHA is really good at it. So FHA allows for that higher purchasing power, that 57 debt to income. It's more forgivable to student loans. It's more forgivable to credit blemishes and credit scores. So FHA has been kind of finding its way as the affordability solution.
Yeah.
So and also you can get more seller credits with FHA. So it all and usually FHA has lower interest rates than compared to a conventional loan. So kind of all around, I'm seeing a lot of people fit inside the FHA box.
That's good. And what's that minimum down payment on FHA?
So technically, you can do FHA loans with 0%, but the standard FHA is 3.5% down.
Okay.
So you can technically go as like low as a 500 credit score, but once you get below a 580, you're going to need typically at least 10% down to attempt for approvals. So
Gotcha.
really would love for you to have a 580 credit score and
Yeah.
3.5% down. I do free credit repair and credit boosting. So if somebody comes to me, like you said, the earlier the better. It costs no money to talk to me. We're not going to charge you for an application. A lot of lenders now are charging for credit applications, charging
Really?
$100 to $150. Because about a year ago, credit reports went up in cost significantly. So if you're taking 100 applications and it's $100 a pop, that's $10,000 a month just in credit fees.
Wow.
So a way for them to mitigate that cost, they're trying to charge people, and they're charging people upfront for that credit report. So Brandon's not going to charge you for the credit report. It's not going to charge you for any time. I wanted to talk to you as early as possible because sometimes it takes 6 months, a year, 2 years.
Definitely.
If you're self-employed, you typically need 2 years of tax returns to buy a house. So my advice is to talk to me as early as possible.
Definitely. So, as you know, I work mostly with first-time buyers. And a lot of my age kids just graduating college, they've got their offer letter, they maybe are getting a signing bonus or something.
Yeah.
But as you mentioned before, debt to income is a huge factor when applying for a loan. So, say we've got a kid that's graduating this May or maybe next year.
Okay.
They know they've got a bunch of student loans, maybe 50,000,
Okay.
maybe even up to 100.
Sure.
What would do the most for them with their money that they have? Should they be just chopping down debt? Should they be using that for rate buy down maybe? Should they be saving it for closing costs? What do you think would do the most for those types of people?
So the person that's about to graduate with an offer letter, we can close 60 to 90 days prior to them starting that job. And if they're saving up money, what's going to be the most bang for their buck? It's probably not paying off debt. It depends on the debt. So student loans, I would leave alone the student loans. They might be still deferred. If it's those credit cards we talked about earlier, then probably attack some credit cards. If it's a 10% automobile loan, maybe let's try to attack that.
Mm-hmm.
But a dream would be somebody has, 620 or 640, and they have 10 grand in the bank.
Right.
And then apply with me, and I can tell them the best bang for their buck to deploy that capital.
Mm-hmm.
So I can say, hey guys, your 10 grand is going to be best used to just staying in the bank. Or, hey, we need to really pay off these 3 items, and it's okay that you're going to go down to 4 grand because I'm going to get you approved for our Rent Buster program.
Yeah.
So I would say have it in the bank, and it needs to be in the bank for 60 days. So cash is trash in a real estate transaction.
Really?
Okay? So you can't just go deposit some mattress money. It needs to be in the bank for 60 days if it's cash.
So
Because
if grandma is giving you a graduation gift.
If grandma's giving you a graduation gift, then I advise her to send it directly to the title company during the transaction. But if she's like, I need to give you this $500 right now, deposit it, and then you have to wait 60 days, and then we can use it for real estate. So for gifts. So gifts are a very popular thing to help with affordability. A lot of people don't have the money to put down, so relatives are stepping up. It's the most simple process if you send it directly to the title company, that gift. Okay. So we're not going to ask grandma for a bank statement. All grandma's going to have to do is sign a gift letter. I'm giving it to Matthew, and she sends it to the title company. That's it. No bank statement, no fuss, no nothing.
But if he puts it in my account.
If you put it in your account, then we're going to need grandma's bank statement, and we're going to see your bank statement. A lot of times grandma does not want to give up her bank statement. She's like, I'm not buying this house. It's not your right to see my bank statement. I just wanted to gift my grandson the $10,000.
Yeah.
So if you're gifting funds, please just send it directly to the title company or get it deposited early, and then let's wait 60 days, and then let's buy a house.
Yeah. No, it's definitely, that matters because it's stuff like people just don't know the processes behind it. And that's why I always say too, like talk to people as early as possible. Just get help, man.
Yeah.
It's free.
Yeah.
And then you don't have issues like that down the line.
Yep.
Like, oh, well, granddad gave me $5,000 as a parting gift. All of a sudden, well, now you have to rerun everything.
Yeah.
And get those bank statements and stuff. It complicates things.
Now you can I've had a person sell a couple horses. I've had people sell a Babe Ruth card. I've had people sell bikes, motorcycles. So you can sell stuff also, just talking about down payments coming together for affordability
Yeah.
to use in a real estate transaction. But we need bills of sales and we need proof of how you owned it. And then hopefully if they paid you cash, you better deposit exactly what's on that bill of sale. Don't get paid 10 grand for your motorcycle and only deposit 9,000 because you wanted to have $1,000 of fund money. It needs to match.
Has to match.
All about paper trail. But I mean, most recently I had a guy sell a Babe Ruth card for $14,000 and then used that. So he sold it, and then we got the bill of sale. We solved the deposit, and he was able to use that a week later and close on his house.
That's awesome.
So I mean, you can sell some things as long as we can track it. They're always going to want to see how it came together. You know, pay stubs. They want to verify everything.
Yeah, of course.
You know?
Like you said, showing reliability.
Yeah.
Proof.
Yeah. So first-time home buyers, though, the average age in America is 40. So
Really?
it's staggering, you know, and that speaks more volumes of how affordability can be tough. But if you have a decent job, you have a little bit of money saved, and hopefully a decent credit score, if you talk to one of us early, we can guide you on what steps to do, what things to worry and not worry about.
Yeah.
So,
So I want to go back to, you said that earlier you could approve somebody to close 60 days prior to their start date, that college kid graduating.
that's right.
That's a big deal. And I've heard a couple of different things in that space, but what do you need from somebody to close them if they don't even have a job yet?
Yeah. So hopefully they're graduating from college or high school. So we would ask for the transcripts of either high school or college, and we would need an offer letter. And in that offer letter, we need a W-2 wage that guarantees hours per week or a salary per month. And then if there's a background check or a drug test, then those need to be cleared. But depending on the loan, conventional 60, FHA 90 days. And
90 days.
That offer letter is the pay stub. That is
Yeah.
everything. So that's it. It's that straightforward. It's Matthew is starting August 1st. He's making $50,000 a year, and he's passed his background and drug test. That's his pay
Right
stub.
on.
He's ready
Awesome.
to go, and me as the bank, we can use that $50,000 salary as income today, not when you've started the job, 6 months, 2 years, and you can bounce around from job to job. We typically need a cumulative 24-month work history, but you can be a plumber for a year, an HVAC guy for 6 months, and now you're in roofing for the last 6 months.
Yeah.
And that's totally fine and acceptable. We just piece it together, show that this guy hasn't been sitting on the couch his whole life. He's
Yeah.
been working. It's okay that it's in different lines of work. And even if it's in a different line of work and they guarantee a wage, you're good to go.
Yeah.
A lot of these travel nurses or travel welders, they'll bounce around from contract to contract, and that's totally fine. We understand it, and we average it, and that's the income.
Okay.
If you're selling cars, if you're 100% commission W-2 person, you need to be doing it for 1 year for us to average it. So that's one of the things that I see a lot where you have to wait for the full year because commission it's 100% commission. So 1 month you might crush it and make 10,000. The next 2 months maybe you only make 1,000.
What about bonuses?
So bonuses you have to be receiving for a year or more, and then we can average it out. So with those strong variable pay, overtime, bonus, or 100% commission has to be able to receive for at least a year to then average out. So
Because that's something that I've run into. People will, my contract says 50, but they're saying I can get like 10 grand extra in bonuses, a year.
yeah.
Well, you got to have proof of that.
Yeah,
It has
proof
to
of
happen.
receiving whatever that variable item is for a year.
Yeah.
And then we can average it. Something I wish somebody told me about when I was young was house hacking. And house hacking is a way to build a rental portfolio for maybe the not so rich person.
Yeah.
Okay. And house hacking, a lot of times is really popular these days with maybe multi-units. And you agree to live in one of the units, and then you can actually rent out the other units. The other units will get forecasted rent done, and that can help you qualify and maybe bring you over the hump to be able to purchase the property. So
Before anyone's there, before you've even received a monthly payment.
that's correct. Yeah. So house hacking is really popular. You can put 3% down. So when you're agreeing to occupy, you're going to get the best interest rate, the least money down, the least amount of fees, because they view when you buy a primary residence, you're going to take care of it the best because you sleep there at night, which is probably true. So with investment purchases, you're going to have to put down probably 20%. You're going to get higher fees and higher rates. And that's because the risk is that guy's not going to sleep there at night. He's got other people staying there. It's probably not going to be taken care of as well. So if I was younger, I wish I had done some more house hacking and went and bought primary residences, let the other units pay for that mortgage, did 3% down, and I agreed to occupy for a year, and then you can rinse and repeat. you can snowball a rental portfolio by agreeing to live there for a year. And you can get the best interest rates, the best least amount of money down, and the least amount of fees.
Mm-hmm.
So
yeah, that's a big game changer right there.
I was just at a triplex in Mobile, and the place was going to rent out for $4,500 a month, but they're going to live in one of the units. So they're going to get, the note was going to be around $4,500, but they're going to get $3,000 a month in rent. So that person's going to have this, I think it was $450,000 house, and they only have to come up with $1,500 a month themselves.
That's awesome.
Live in it for a year, and then they're going to be able to start cash flowing the place once they move out and go buy another primary.
That's sick.
And you can have lower credit scores to do that too, but house hacking, it helps combat the affordability.
Yeah.
You know? So that's something I'm seeing. I've been rescuing a good bit of deals as well. And deals don't die. Deals weren't structured appropriately at the beginning.
Yeah.
Okay, you have to set the right strategy up front, and the deal shouldn't die. If I'm issuing a pre-approval, 99% of the time we are closing that deal. And to tell somebody at the last minute they're denied is the worst thing you can do in this business. And I pride myself in never, or very, very, very rarely, somebody could buy a Ferrari the day before closing or get fired.
Yeah.
But when I issue a pre-approval, we're closing. And we're closing on time or earlier.
Let's talk about that for a second. People just assume, oh, if I apply for a loan, we're going to close.
Right.
But different mortgage companies have different closing rates.
Yes. Yeah. So, I mean, there's a lot of places out there. Some of I rescued one most recently from Rocket Mortgage.
Yeah.
They were using 2 years of tax returns for this person. And I was able, with my bank, to use 1 year of tax. They were denying them at the last minute. They said, we're good. And then we're not good.
Yeah.
So I had a phone call 10 days prior to closing. They were getting denied by Rocket. I picked it up. I was able to calculate the income and use only 1 year of tax returns with my 1 year tax return loan. And they got to the closing table 2 days ahead of time. So that can't happen because you spent money, time, and emotion. That seller thinks they're selling their house. There's many reasons deals can die, and then I pick it up. But if it's set up appropriately from day one, that should never happen. You need to set clear expectations of what's going on. Typically takes 30 days to close on a house.
Well, so what are different companies doing that it's not closing? What are you doing differently?
Right.
The legwork on a loan.
So some people do pre-qualifications. So a pre-qualification could be, hey, this is Brandon Reed. I make $50,000 a year. I have an 800 credit score, and I have $20,000 in the bank. Can I buy a $250,000 house? So somebody goes, okay, that all sounds good. If that's all true, then yep, you're pre-qualified. So they send out a pre-qualification letter, which they didn't check the credit. They didn't check the earnings. They didn't check the bank statement. They didn't check if they're a valid U.S. citizen. They didn't check all the little boxes that need to get checked. And then to take it a next step is you can run it through underwriting. So when I issue a pre-approval, I'm going to verify the income, verify the credit, verify the assets, and I'm going to run it through underwriting. So the underwriter is the judge of the file. I'm basically your attorney in the courthouse as your loan officer. But the person that's going to say yes or no is that underwriter, that judge. And on day one, I'm getting that underwriter to say, yep, this file is clean.
Awesome.
Okay. And that's the difference of a pre-qualification, a pre-approval, or a pre-approval with an underwriter. And I run all my files that way through it. So we have a clear plan because this is a big deal. You know, this is hundreds of thousands of dollars. This is where you sleep at night. And I can't have people moving boxes and then not be able to walk into their house.
Right.
So there is, each institution does it differently. And some of them are that weak where they just do it over the phone and just trust the person says everything is true. And that's it. That's what it is. Self-employed people, they think that they make $100,000 because technically they did. They made $100,000 in plumbing work, and they have a 1099 that says I made $100,000 from 2025. But what self-employed people like to do is they expense miles, they expense materials, they expense the truck. So as a lender, you're going to go off that bottom number. So the bottom number might be $40,000 that a lender looks at, not that top line of $100,000.
So your people can get screwed because their taxable income they've chopped it down, writing it off.
Yeah, that's
and now they're not making that $100,000.
And they can get super, I make $100,000. What are you talking about? Well, right here off the tax returns, it shows you actually only are taxable on $40,000. So that's when you get a little bit more creative. You could go down the rabbit hole. Bank statement loans are super popular for people that are self-employed, where you're taking 12 months of the bank statements and those deposits are average. That's the qualifying income. I've got a 1099 loan that's really popular, where we just look at the 1099 for the last year, made $100,000. Boom, that's the qualifying income. There's a P&L loan. We get your CPA to sign off on, hey, this person's profit and loss over the last 12 months has been this, signed off on a CPA. And then one of our most popular loans I was literally working on before I stepped in here is our no questions asked 20% down loan. It's the prime one. It solves all problems when you can't have anything else working.
Yeah.
So put 20% down, have a 680 credit score. That's it. No pay stubs, no debt to income, no work history, no tax returns, nothing. So
Is there a higher rate?
Great question. Yes. So with that, you're going to have a higher rate. You're going to have some more fees. But otherwise, you literally have no options to buy a house. So when you've been told many, many, many times by different people, I would love a shot at it, to do it vanilla, tax returns, pay stubs, to try to get you the better deal. But if all else fails, do 20% down and do the no questions asked on. Then maybe get your paperwork together in a year or two. Then let's do a refinance to that lower interest rate. So it's not forever, but it's that bridge to your dream home.
Yeah, because a lot of people think, oh, once I sign this, I'm locked in.
No. So something else we offer is a no lender fee refinance for 36 months after closing. So this person's that's been getting told no, I'm telling her yes. She's going to be able to buy her house. She's got a dog kennel where she breeds 60 dogs. So it's very important for her business and her family that she buys this house. And then we're going to get her paperwork correct in about a year, next tax season. And she's going to refinance to that lower interest rate. But she can get her dream house, her next chapter that she needs today.
Yeah.
So without the Prime 1 loan, that wouldn't be possible. And she literally had been rejected by 4 other lenders. Yeah. And that's something that we have at local bank that nobody else has. Then it's a game changer.
Right. Because there's different loan types. People think, oh, there's FHA, conventional, VA.
Yeah, I call those the 4 main food groups, which pretty much everybody should have and should do well. But then there's tons of creative financing that your lender needs to think outside of the box.
Definitely.
So a lot of people call me and they're hesitant, maybe for one case or the other. Automobiles, installment loans. I want to pay off my car before I apply for the house, because that's going to free me up. And hey, that is going to free you up. But as a lender, did you know that I can omit 10 payments or less? So if you have 10 payments or less on a car, I already am not thinking about it. I'm already not counting it against you.
So you should keep that capital in case you can do a rate buy down, or maybe put more towards a down payment.
Yeah. So here's some. So every $10,000 you put down moves the monthly payment about $70. So if that's worth it to you, then let's spend another $20,000 on the down payment, and your monthly payment's going to shrink by $140 a month. Some people are like, I'd rather look at $20,000 in my bank account and I'll pay the extra $140 a month. So, but that's why I'm more of an advisor, to just show them their options, so they're those educated and empowered, so they know what they're doing. And you're right, it's not forever. So even, rates go up, people sell, people get divorced, and I'm there to help them understand all of it.
Yes.
So
yes.
Yeah.
So what would you say, maybe people have heard some things from their parents or different lenders or different financial advisors. What's the best way to pay off your loan? I mean, people have talked about maybe making half payments throughout the month, or
so if you
double payments.
Yeah, if you make half payments, that's actually going to be 26 payments a year. So that's, in theory, would be 1 extra payment a year, and you're paying it just every 2 weeks. So it's kind of like what you're already doing. Yeah. 1 extra payment, whatever your payment is. If your payment's $2,000 a month, if you went in there and made 1 extra $2,000 towards principal, it's going to shave off 6 years of the loan.
That's a lot.
It's a ton. So please make 1 extra payment a year. Over the course of 30 years, it might not feel like you're doing a lot, but you're actually shaving off 6 years off that 30-year loan.
Yeah.
So, I mean, it's a huge deal. 6 years is 6 years. Deal. So, and then the partial payments is great. And any extra money towards principal is fantastic. You know? Yeah. Pay extra money towards principal, and you're going to shave off tons of time. Mortgage interest is deductible, though, on your tax returns.
Is it?
So, so a lot of times, another win when you're buying a home is that you don't think about is that you can deduct all that interest you've paid over the year to help get you a bigger refund. Yeah. Tax refunds are eligible for down payments or closing costs.
Student loan interest can be written off too.
Yep, right.
And payments. If you were in school that year, whatever you paid towards tuition can be written off as well.
I think they just did something with American-made vehicles as well. Buying a brand new vehicle, the interest is deductible. I think Trump just put that through.
That's cool.
Yeah.
There's so many options, man.
So many options.
I think on that school thing, we touched on it a little while ago. I've got kind of two more things. You said you typically need a year of work history put together, or maybe 24 months.
So usually
Yeah.
you want a 24-month cumulative work history. Yeah. But I mean,
But
people
in
with the offer
college-
letter, the people with the offer letter, the transcripts are the work history.
Yeah.
So if you're a recent graduate or about to graduate as a nurse or a teacher or whatever it may be, give me an offer letter. The college transcripts are the work history, and you could close before even starting that job at the hospital or the school.
Myth
Right?
debunked.
Right. Yeah. So you don't need to be 2 years at the job. You don't need 20% down. You don't need an 800 credit score.
Nope.
So the lowest I've helped somebody was a 505 credit score. They did have to do 20% down, but you bought a house at 505 credit score. So I mean, and then tons of people buy houses with no money down.
Yeah.
So it's definitely possible. You just need to talk to the right people, the right guidance, and we can point you in the right direction.
Definitely.
You know.
So what do you do when somebody applies and you just can't do it? How do you help that person maybe get to the point where they can?
So when somebody applies and they're not getting what they want that day, I'm going to tell them exactly how to get it. So co-signers are allowed.
Yeah.
I'll say we need to pay off these debts, maybe not for credit. Maybe your credit's great, but maybe we need these 3 debts gone to open up your debt to income ratio so you can buy the $300,000 house. So I'm going to tell them the most bang for their buck on their debt to pay off because they thought the highest balance one or this one to worry about or vice versa. Or I'm going to show them exactly, we have a simulator for credit that's for free that I can run. And I can say, hey, do these 3 items. It's going to get your scores up 48 points in the next 30 days. Let me know once you completed it. We will soft check the credit, and then we will see the new scores, and we will try again. So it's never a no. It's a way to a yes. It's a clear path forward. Please do this. Let me know when it's completed, and then we'll keep the ball rolling.
Because people are just terrified of rejection, right?
Yeah.
But you can help them. It's
can
not
help
a
them.
no. It's a not right now.
That's exactly correct.
Yeah.
Yep. It's not a no. It's when. So,
Yep.
But do X, Y, and Z, and we're going to be there.
Yeah.
So
Even if you can't get a loan right now, we're still going to work with you. We're still going to tell you the tips and tricks on how to either improve your credit or debt to income so you can be in the spot where you are able to qualify for a loan.
yeah, I've taken it where it's taken 3 years for somebody to get ready. They were a little slower to take action, but they did take action, and it took some time, and we were able to buy a house. So there's no one-size-fits-all situation. I'm going to hold your hands. I've got a lot of patience. I've been blessed with it. My wife's a teacher, so maybe patience is in our gene pool here. Or whatever.
Oh, yeah.
But I'm going to show them. And I'm texting, I'm calling, whatever their communication style is, I'm going to try to match and make sure they understand what's going on because they really should teach this stuff in school.
Yeah.
Because it's almost like another vocabulary, and they're like, what's going on? Down payment, closing costs, earnest money.
Yeah.
What is escrow? Like, what is all this stuff? And I'm like, hey, just listen to me. This is what we need to worry about today. Once we've got that handled, we'll start worrying about this.
Definitely.
And eventually, if you listen to me, you're going to be in a house.
For sure. Yeah, a lot of people are just afraid to tell you things. They gatekeep some of
Yeah.
their financial stuff and everything. Like, oh, I don't think they should know about this.
Yeah, no, that's another thing. I'm on their team.
Yeah.
I work for them. My job is to accomplish their goals.
Yeah.
So I'm going to find a way to do that because that's literally my job. I wake up every day thinking, how can I help more homeowners or wannabe homeowners get into houses?
Mhm.
That is my job. I don't do checking accounts, savings accounts at my bank. I am more residential lending all day, can do a little bit of commercial if I need to, but that's my whole life. I've got
Definitely.
a whole team around me that supports me and my clients to get them to the closing table as fast as possible.
Yeah.
And with clear expectations and the least amount of headache.
I think that's really the difference, right? Is the communication.
Yeah.
Because not being able to get a hold of somebody and maybe even just point them in the right direction, it's so hard to get anything done.
Yep.
But somebody like you call them personally, you talk to them personally, you
That's correct.
get to know their information and point them in the right direction. I think it's so important.
100%. Yeah. What is it? DSCR loans. Have you heard of those?
I have.
Those are really popular, especially it's spring, summertime. People are going down to the beach, they're vacationing, and they're looking back at that condo going, how would I buy one of those?
Yeah.
And The DSCR loan is great.
What does that stand for?
It stands for debt service coverage ratio. What does that really mean? Whatever the thing rents out for is the qualifying income. So throw your tax returns in the trash. This is for investment purchases only. Put 20% down. If that condo is renting out for $5,000 a month, that's the income for it. I don't want to see how much money you're making. Put 20% down, and that condo is yours.
Yeah, a lot of people think that's out of reach. Like that's not even in their ballpark to get an investment property.
Yeah, they don't have to make $300,000 a year to qualify for their primary plus this new condo.
Mm-hmm.
The condo does all the financing. And something cool that people are doing is HELOCs to get equity out of other properties, and they could essentially do 100% financing investment purchases. So they're getting home equity lines of credit out of other properties, that 20% down, putting that $100,000 down on that condo. So they didn't have to come up with the 20%, and they don't have to come up with the 80% that's getting financed.
How do you figure what that condo is renting for? You just said like you take their, if it's renting for X amount of dollars, that's the income.
So just like the appraiser is going to go out there, a third party, every finance transaction, for the most part, you can get appraisal waivers sometimes, but for the most part, require an appraisal. That appraiser is going to look at other like properties, comps for the value. It's also going to look at other properties for the forecasted rent. It's going to probably reference what's been on the rent roll, the property's been renting out, and then do an average of it. And so the appraiser is going to tell us what it's worth for value and what it's going to rent out on average per month. And that's the qualifying income for that.
Nice.
So those are really popular. Got a couple condos.
Definitely, especially in this area. I mean, you've got the whole beach of condos and everything.
Yeah, and I mean, they can be cash cows.
Yeah.
I took my family down there this past summer. I mean, it's hundreds of dollars a night that these things are renting out for. So these investors are happy a lot of times.
Definitely. It's a pretty lucrative market. It's hard to get into.
Yeah.
But not hard to get into if you're wanting to start your own.
Yep.
You know.
So if you're self-employed, if you're a veteran, whoever you are, I think I've got a solution and a game plan for it.
Definitely.